What's going on, guys? You know what time it is. It's where I was right, where I was wrong. Let's get to it. Oh,
What was that? Was that wedding music?
It was the default. That's the default music. Oh, well, we'll start that over. What's going on, guys? You know what time it is. It's where I was right, where I was wrong. Let's get to it.
When Brad was right.
All right, so this past week on Stockwatch Sunday, I said that Under Armour was going to be one to watch. It was going to be a great recovery stock to keep an eye on, especially on the retail side, as they were kind of tightening up their budget. They were looking to pivot into content creation, and sure enough, Under Armour actually ended up having a fantastic week. They moved about 10% since we talked about it on Stockwatch Sunday, and I still really feel confident that this is going to be a good one to hold leading into the holiday season. And then also 2021, I think, could be a really good year for Under Armour. I know we've talked about it just for one to watch for the week, but I really honestly feel like this is going to be watched for some time. And I think that could end up getting into the $15, $16 range, which could yield another 30, 40, 50%. I like Under Armour a lot. We talked about it at length on Stockwatch Sunday, and I think that this is just going to be a really solid one to hold for the future.
Yeah, this is going to be a sleeper, and we got to show love because it's we're here in Maryland, so it's a Baltimore company, so it's only right. But it is time. It's 42% off its year-to-date highs.
Yep.
So I think that this is a good opportunity for it. And one thing we mentioned that most people didn't know about is look out for this partnership with Virgin Galactic as it goes into space. And I think it's going to be a cool little PR move that's going to get Under Armour back into the forefront of the public.
Yeah, I mean, Virgin Galactic, and then their focus on content creation with Instagram and Facebook. I think those two things are going to be huge for them, and then being able to cut costs as far as all the sponsorship deals that they were just over leveraged on, I think it's really going to help the company in the long run. So good stuff here. We love Under Armour, if it wasn't clear enough. The next one is going to be Delta, and this one we were right on in a sense that we expected some sort of move out of this to the upside because of positive stimulus talks. Now, stimulus talks were all over the place. Whoever tweeted that specific day, that's where the stock market and airlines moved. But nevertheless, Delta ended up moving in the right direction. Now, one thing that I will say is that we were under the impression that they were going to have earnings. There's lots of mixed reports as to whether or not they're going to have earnings this week. They didn't. It looks as if the earnings are officially going to be on the 19th. So look for this to kind of be back in the forefront, and we'll look to speak on this again. But really, it all comes down to whether or not the airlines receive some sort of stimulus. And right now, it's still up in the air. But I don't know if I would want to be without some sort of shares of Delta, either Delta, Southwest, JetBlue, something along those lines. That it's a good company, that they have some sort of decent balance sheet as it relates to airlines. I just don't know if I would want to be without shares of some kind in the airline industry in case that stimulus goes through.
It's actually the 13th.
13th, sorry.
Just to clarify.
13.
Yeah, so Delta... Delta should be interesting going into it. And what we've been talking about in the Chaos Crew is we're really just looking for optimistic news. So It's not like, any negativity I feel like has been built into this stock. It's not like they're going to tell us anything that's going to blow us away from a negative side. If we get any sort of positive news, that's great. But really, this is all about the stimulus. We're waiting for the stimulus, and this will go off once that goes through.
Yep, couldn't agree more. And I like I said, I just don't know if I would want to be without shares at this point. We've kind of been shitting on airlines here for a while, and I think right now it's about time to start working our way in. And if you can afford the risk, because there's still inherent risk involved with this, just in case something doesn't go through. But I think that, I just wouldn't want to be without something. Moving on, we got Rocket, and man, what else can we say about this thing?
Let's go.
We got shit on so much for just being having such a hard on for Rocket, but I mean, the boner candles don't lie, my man. This thing has been going off all week. Went from 1984, which was a damn good year, by the way, and then went all the way up to $24 a share this morning on upgrades from JP Morgan. I expect more upgrades to come. It's so funny. We talked about putting our tinfoil hats on with Rocket, how everybody was just kind of like downgrading this thing. It's not going anywhere. And then we're looking at the industry as a whole, and we're like, well, wait a minute. Houses are selling like crazy. Mortgage rates are at all-time lows, and we're just going to sit here and pretend like Rocket isn't going to benefit from that? I don't think so. So we decided that, we were going to go all in on Rocket, and I don't have any desire to sell this for the foreseeable future. As long as interest rates stay low and real estate stays hot, there's no reason for me to sell Rocket at all. I think we actually end up creeping up towards that $30 mark before long. And I just don't think that the seasons are going to really impact the industry at all, given the way that the market's been moving.
Yeah, the watch list this morning that we sent out to the Chaos crew, we had put how it had just JP Morgan had just upgraded, so it was a second upgrade, and this is the second chip of many to fall.
Yeah,
and so more and more analysts are going to get on board. I agree with you. No reason to sell, at least until the lead up to the next earnings.
Right.
I think more people are going to figure it out. And I think this is just the beginning of the run. So I'm going to be walking around the city with boners.
Well, okay. So yeah, anyways, needless to say, we knocked Rocket out of the park. I still think it's a hold, and I think that we only go up from here. Love the stock a lot. Now, this is going to be an interesting one.
When Brad was wrong.
And that's going to be Levi. So yes, Brad was actually wrong on this, but Fat Man Zoom was right on it. And he was even way off. I mean, like, we were both like, this thing, we were expecting a loss on this. The expected loss on this was, a loss of 22 cents, and came in cash positive 8 cents up. So I was just completely blown away by this. There was a lot of concerns that had to do with supply chain issues and everything like that, and we saw how that impacted Stitch Fix. I thought we would see something similar here, and that wasn't the case at all. And in fact, not only were they cash positive, but then they announced that their deal with Target was going to be extended to even 500 more stores. So this was incredible. I was just pleasantly surprised. If you guys were like, Brad, you're crazy, you don't know what you're talking about, congrats to you guys, because you knocked this one out of the park. But Levi was a huge stunner for me.
It was hard for me to predict this thing being cash positive. I think anybody would have been hard for.
Yeah.
Like you said, I did predict a beat, expected 22 cents. I predicted a loss of 18 cents.
Yeah.
But yeah, I mean, it was so far off. But here's the thing we talked about. We talked about it with Lululemon. We talked about it with Nike. We talked about athleisure, but people who are working from home, they're not buying business casual. They're not buying nice clothes.
Right.
They're buying workout clothes, and they're buying casual clothes. And so Levi fits right into there perfectly.
Yep.
I think we underestimated that a little bit. I think also it's kind of unsexy. It's an older stock. So how would that transition? But clearly with their online sales surging, like you said, the partnership with Target, things are really good. And this is probably only the beginning of the story for Levi.
Yeah, I was just completely blown away by this one. So, but yeah, what a move. What a move on Levi. The last one that we were wrong on was Domino's. And this was actually a little bit of a stunner as well. It missed by 24 cents, actually, despite sales growth and all that good stuff. And a lot of this was impacted by extra precaution and money that they had to spend to, kind of protect people from the Rona, some of the PPE equipment or whatever they needed to do to, basically safeguard themselves from getting employees sick, getting customers sick, that sort of thing, costs extra money, which affected their bottom line. So despite growth in sales, they still had to spend a lot of extra money. This, to me, though, was an opportunity. We kind of talked about how even if Domino's ended up beating earnings, that this may be overhyped. And so there was a pretty decent sell-off. I actually ended up grabbing some of this at $3.95. I was not expecting my order to fill at $3.95. It did, and I actually was pretty pumped about it. Sitting now up over $400 a share, and I think that this still remains bullish in my opinion. You can see on this daily chart that I have that it still remains in this bullish pattern. This hasn't fallen out of it just yet. Got pretty darn close, but still there. And I think that we do see more growth out of Domino's, especially as they may figure out how to be more efficient as far as their spending goes, and things start to develop more positively in the right direction for as far as the Rona is concerned.
And with Domino's, as far as the efficiency and spending, there's never been a question of their management's ability to manage the balance sheet,
yeah,
or the P&Ls actually. So I'm not concerned about this at all. I agree with you. This is an opportunity. you can't, I mean, how would you even think about considering the extra cost? We've seen it a couple places, but they do a great job with efficiency and spending. They're going to figure this out. That is the only downside. Everything else you look at from the earnings is great,
Yep.
and we're bullish on it. This next quarter, I think, is going to be a monster quarter. So, yeah, you're right. This is an opportunity. If it dips back below 400, I think it's an easy buy,
Yep.
and it's not going to stay there for long.
Year-over-year growth was just absolutely incredible, and there's no signs of that slowing down anytime soon. So couldn't agree more there. And that is where I was right, where I was wrong. Guys, if you heard us talking about the Chaos Crew and all that good stuff, make sure you're hitting that join button below, and be sure to join us for Stack Watch Sunday at 7:30 p.m. Eastern Time on Sunday night to get ready for the week ahead. Thanks for joining us. Please like and subscribe. As always, we will see you all before the bell, and we are out.